right. Hey guys, nice to meet you here. We're going to start our first panel. It's web3 payments from past to present and how the traditional banks are keeping up. So we have several topics to discuss, and I propose to start with the bridge between the crypto and banks. So, as you know, like lately, MasterCard announced their program to help like financial institutions to offer crypto trading. Visa, last week, I guess, they announced their partnership with FTX exchange, and they want to issue like cards, debit crypto cards for 40 plus countries. And American Express is like plotting their move to stable coins. So, what do you think? Is this big bank invasion like a vibe killer? Yeah, let's say it. The vibe killer for the crypto enthusiasts who wants to keep this space like
for themselves, right?
Decentralized, yeah, as decentralized as possible. Yeah, what do you think, Iouri? Or yeah.
We do have Bank of Georgia here. Bank of Georgia maybe would answer this question, what's happening in there.
Maybe I will start.
Yeah, sure. Yeah. Regarding your previous experience at MasterCard, I guess you should start.
You mentioned the word bridge. I think the bridge is actually already there. So what we're building now, we're building like a highway, like seriously. You can get Binance card like in all your member states. You can get a Binance card in Argentina. I have paid with Binance Pay when I took a taxi from the airport to the hotel. So like the solution's already there. About that the banks are invading kind of like the space of crypto and others. Like I would say maybe it's us who are invading the banks rather than invading us. And it's kind of like it's beneficial for everybody, you know, because normally banks, they have like commodity solutions. MasterCard, Visa, they have like great products, commodity solutions. So we're kind of just like combining it together so that people can use their crypto assets like in a daily life. So it's really the highways which are getting to build there now. And I think like in Georgia, you will see it soon. In other countries in Central Asia, you will see it soon. Of course, like in Middle East, you will see it soon.
All right, thank you. I guess Levan and Eralp has a lot of to say here regarding this topic. So, hey guys.
Hi, can you hear me?
Yeah.
Welcome again. So yeah, so regarding the question, I think what I, as a representative of Bank of Georgia, would say is that in Georgian market, we're not just an infrastructure providers and commodity providers. Our mobile bank has over 1 million active users out of 3.5 million population. So we became pretty good at user experience, building the service providing interfaces pretty well. So like looking at these technologies, I think one of the things that we do is we're trying to build those services for customers in our digital channels and provide the best-in-class customer experience. One of the things that we announced probably a year ago, 6 months ago probably, it was the crypto trading service in mobile banks. So we're developing it. It's going to be pretty soon when we actually launch this product with our partners, together with our partners, and our customers will be able to do the fiat currency transactions as well as cryptocurrency transactions. So that's the start, becoming the converter of those currencies. But then all the services that we provide to our customers, like payment solutions, investment services, the asset management services, let's say, because the cryptos and the NFTs are becoming pretty big virtual assets as the financial assets as we have today. So basically, the banks that are that invested a lot of their resources, a lot of their investments into hiring software engineers, and we have over 800 of those, and started to develop the customer experiences pretty well. I think they would survive and they will enhance, and they're going to compete, providing the best services. But the banks that are basically the commodity providers and just the infrastructure providers having the back office transactions, I think they'll struggle.
Right, thank you. Eralp, what do you think?
We have talked so much about this subject, and thank you very much for having me, first of all. Second thing is that banks invading or not invading, it's kind of like question mark still. Banks, we need we need big organizations in this sector. We are saying crypto is future. And with more regulation, I guess banks will be more active in this field, and that's the reality.
Yeah, I agree. All right. What do you think, guys? Is getting like major financial institutions involved key to crypto going like a mainstream? What do you think? Is it going to be a mainstream? Sorry.
Yeah, my name is Max. Yeah, just wanted to add maybe just a bit on the previous one. So, as a representative of the business, right, I see on the crypto adoption from the business point of view. Basically, there are two main flows, right? The people who say that the cryptocurrency is the way for us to hold our money with ourselves, right? We don't want to trust banks, we don't want to use our Visa or MasterCard to spend our crypto and so on. Those people are mostly in the web3, right? They are not willing to share any of their information and so on. But the real adoption is happening through the average Joe, right? So the people like majority of you, right, who have their bank accounts, who have usual jobs, right, and you just want to use crypto in your everyday life. And of course, in order to use crypto in your everyday life, you sometimes need to buy crypto, to sell crypto, right, to withdraw money to your bank account and spend your crypto in the taxi with the card from Binance or whoever you order the card from, right? And of course, when this amount of people is becoming a big group of people, right? We are speaking about hundreds of millions at the moment all over the globe. Of course, various banks, financial organizations, financial groups, the payment solutions like Visa, MasterCard, like the PayPal, they want a piece of the pie, right? This is extremely obvious. They see that millions of people are moving money through the systems and they want the systems to be their systems, right? So they are buying the companies or just setting up the partnerships with those companies and so on. So this is definitely what is happening, and this is definitely what will continue to happen. All of you who are like really Bitcoin maxis, right, or degen, right, who say, no, we don't want to use any centralized solutions, you have the right to do so, but the adoption for the merchants to accept crypto, for you as a degen representative, be able to spend your crypto everywhere, you need those average Joes to use crypto to make it interesting for banks and other organizations and merchants all over the world to accept that crypto. So this is where I think it's going. And Max, I totally forgot what was your question.
But that was a good answer, definitely. All right, I guess we can move to the next topic, and it's kind of related with the previous one. Let's talk about CBDC, like the central bank digital currency, like stable coins and other digital forms of money. So, as we can see, the proportions of central banks actively engaging in CBDC work is growing, along with the rapid rise in circulation of stable coins. So, what do you think? What could be the potential scenarios for this? It's like a coexistence, or it's like primacy. George, would you like to start with this one?
Thank you very much.
Sure.
I'm happy to be here. We have to, I'll talk first about CBDCs and the development around this. We have to first kind of differentiate between the retail and the wholesale CBDCs. I think your question more is towards the retail CBDCs, like for everyday use. A lot of countries have specific guidance with this, and the design, like the technological implementation, technological design of how they want to operate is pretty different. Some countries decide probably will have like their own private blockchain to do so. Some will have, some will use the existing public blockchain, but will kind of build a second layer over this. I think the second approach would be better because you kind of get the good security from the public blockchain and kind of add your layer on it. But obviously, the control mechanism that central banks have over money printing and money flow control will be very much easier to do when you have CBDC. So the personal privacy and things like what crypto enthusiasts value will be obviously reduced once the CBDCs, if and once they become evident. If we take the Georgia's example, National Bank of Georgia is also planning to do this, and they have stated that their role is to make it kind of change or supplement the cash usage. So that means that obviously the cost will be reduced because we don't see it, but moving cash around, printing cash actually has a lot of costs. But we have to analyze it based on cost-benefit analysis, and the costs obviously, even though benefits are reduced costs materially, there are huge costs on the personal privacy side. So I think that if we compare this to stable coins, just 1 minute to talk about that as well. Stable coins are obviously more decentralized. They are still a private money. But if you really think about it, stable coins actually promote inflation a lot because because the current stable coin models do not have when you pay when you kind of convert your fiat to stablecoin, you have stablecoin, but the issuer of the stablecoin still uses it. They say that it's 100% backed, and some USDT, for example, has stated that they have gotten rid of commercial papers, but this money still stays in the economy. Now the proportion of stablecoins to the total money is low, and that's why we cannot really see it, but as it grows, you have a stablecoin which itself has a value because it is backed by fiat, but the fiat does not live in economy. It's still being used, right? So you essentially multiply the value in the world without really creating any value. So that in a larger scale, if we think about it, that will be like 100% inflation in the world per one USDT or any other stablecoin printed. So it's all about the magnitude. So how big the stablecoin is going to grow.
Okay, thank you. And what do you think? Will these like two-tiered systems, like CBDCs and stablecoin, will they be sustainable over time, like both of them?
Is it to me or someone else?
If you want, you can answer. Yeah, sure.
No, if anyone.
Levan, maybe you want to participate here.
So you're asking about the CBDCs being sustainable, right?
CBDCs and stable coins as well, yeah.
Yeah, I think the CBDCs, I think, it has its own advantages. Like one is cost efficiency, really, because like let's say Georgia is pretty cash-based economy still, and it has a lot of cost to move money around, and I think having the digital-only currency gets a lot of cost efficiency in general. And we like the whole bank strategy is to digitize their services and have those transactions virtual. So because it is way cost efficient and also more effective to transact. And I think another one is that the CBDCs are generally very fast, and I think having faster transactions and faster processing times is something that gains a lot of advantage for the banks that are planning to have that also used. So I think the only thing I think the CBDCs has this centralized nature, and I'm not sure about the modern economy, how this is going to survive, because everything goes to decentralization. But I think even those decentralized currencies need some infrastructure, because it's not going to be like only virtual world or only physical, right? It's going to be always like a hybrid. So there will be some players basically providing services to be the bridge between those two worlds.
Sure.
If I can add
yeah,
a bit
sure.
on what Levan and George said, I think you mentioned, guys, here like three important elements, which I think are the key elements. The first one is speed, the second one is price, and you were talking about privacy. I would a bit rephrase the word privacy for transparency, because it like goes both ways. For example, when I'm paying taxes, then I will be able to trace that, oh, look, like my taxes are going actually to this hospital or to this school, and not to a kind of like corruption scheme from the government and so on, so it's kind of like both ways.
Agree, but corruption will not be deterred by the CBDCs themselves.
Yeah, absolutely. But it's like one of those little bridges. It's like one of those little bridges into the transparency and making like the whole society a better place.
Exactly, I agree on that.
And I think the banks are doing a huge amount of investments into fraud management softwares and tracing transactions, and it's a pretty big hassle to analyze the potential fraud behaviors. And I think the CBDCs, since those are based also on the crypto technology, blockchain technology, allows some of the modern technologies to do it way more efficiently rather than how we do it today.
Sure. I think we should discuss the regulations here because, what do you think? What should be the appropriate policy and regulatory response to stablecoins?
Not pushing companies so much.
I would say, for example, BUSD, if we're talking about our stablecoin, BUSD, it's already enough of regulation. It's controlled by New York Financial Authority. And there is an audit every month, and the custody is held within the American banks. So I think that is pretty much sufficient to make sure that it's a fully legal, stable coin.
Okay, thank you. Maybe you guys have something to add here. You're really welcome.
I have a bit to add on CBDCs. What I wanted to make as a point, I agree with most of you guys speaking. Basically, CBDC it's missing a bit of definition and classification. I think it's sort of somewhere in the middle between crypto and between the existing financial ecosystem. But I think it's good for crypto in general. So, for example, what CBDCs are doing, they are not trying to hurt crypto industry or compete with sort of decentralized world. They want to compete with really centralized financial systems like Visa, MasterCard, SWIFT, and SEPA, right? So, and I think there would be enough space for businesses for exchange hubs and so on. So this is a way to rethink how centralized financial world should be disrupted slightly, right? So each country has real control over the global trade with their asset, right? It will help with the import, export, and it can disrupt the forex slightly. What we see right now is happening with the stable crypto assets, right? USDC, USDT, BUSD. The forex is now being rethought, right? You can exchange them 24/7 on decentralized platforms. I think with CBDCs we will see something similar. So I think this is a good way for existing financial ecosystem to become more decentralized, because right now it's very centralized. But I don't see this as a threat for crypto world, right? So they will be existing together. You will be able to exchange your CBDC into USDT, BUSD, or whatever, or in crypto, or vice versa. So I don't see here that we are entering something bad. And also for inside of the country, right? When you send money in the shops, when you buy something in the shops or whatever, even inside of Georgia, right? You're most likely using American systems, right? To do so. Your transactions are still cleared through US, right? And with CBDC, the country really will have control over what is happening inside of its economy. So I think it's a good thing for everyone.
Yeah, George.
And
Please.
there, one problem that remains there is the interoperability. So the countries have to then kind of have signed memorandums so that CBDCs are interoperable on the cross-border payment to be effective as well. Because currently, on average, from 5 to 6%, 5 to 6% is the average transaction fee of sending money from one point in the world to another point. CBDCs have a potential to actually either eliminate or reduce that like 95% at least. But the problem remains with the interoperability. It is easier to apply or to make modifications to something where users are low in numbers, but as the users grow, it's based on Metcalfe's law, right? So as the users grow, the growth in the value of the network and also growth in the difficulty of introducing something new grows exponentially. So that's the biggest problem that still can now remain for years to come. So how different countries can decide to be better interoperable.
Okay, thank you guys. Sounds really interesting. I propose to stick with the regulations. Let's stick on this. I'm really excited about regulations.
Me not.
Yeah, as you know. So here it is. The latest Tornado Cash saga showed us that DeFi can't escape regulations. And DeFi developers seriously need to consider working with the regulators or on compliance issues if they want their project to be success. So is the institutionalization of DeFi increasing inevitably? What do you think, George?
I assume that a lot of from our audience knows what Tornado Cash is, was and is still. But what happened, and United States still proves to be a kind of precedent setter in this space. They have jailed the developer, so guy who was the contributor of the code behind the Tornado Cash. The precedent itself is something unheard of so far. So everyone is looking at how this will be seen and what the future appeals on the judges have to say. But the problem is, and I've seen it in a lot of other industries as well, sometimes the standard and regulation setters of specific industries do not fully understand that industry. So that's the biggest problem so far, I think. And that's why the regulations that they come up with sometimes is not very effective, if we say in layman terms, but in reality, they actually forbid further development. The similar thing could be said about, for example, Ethereum when it moved from proof of work to proof of stake. In about 1 week, United States had about 46% of the whole transactions we are validated by the nodes with the US IP addresses. That's why US has a jurisdiction over all over the Ethereum transactions. That itself, the statement itself, is also a precedent setter, right? If that goes like that, that means that Ethereum is not decentralized at all, which we see because the validators validation is increasingly done by several large stakers. So I think that on the one side, we have some kind of need for regulation, because without regulations, it's, as we say in crypto world, old Wild West, as it was before. But on the other side, too much regulation, or the regulations that do not really, the regulators that do not really understand what they are regulating fully, it means that we will not be able to get the regulations that are both effective and can also be efficiently applied, so to say. That's what I think.
I will also add a bit here, if you,
Sure.
if you allow, what George was talking about. So, like, regulation is not something what is given by God. It's actually written by people, right? It's we have legislative bodies who are sitting there, who are writing the laws, who are creating this regulation. Like, indeed, sometimes they're lacking knowledge, but that is why, like, the companies are there. That is why the industry are there. We have to explain how it works. We have to find with the governmental bodies like the best ways to implement regulation that it benefits the societies. And I think like events like this actually is like one of the steps to do it. You know, it's like explain our industry, see what is the best for people, see what is the best for the society, and then like already out of that make a proper regulation which would benefit like all the sides.
Sure, thanks. Eralp, I guess you have some comments there.
Regulation has both sides, right? Good and bad sides. Regulation is made for the companies to protect people. So in order the company to not losing their money, not getting lost, and just closing and getting away. So, but regulation is like he said before, is that main problem is that regulation should not push the business. So it should have right borders for the business in order to be scale and grow. So when we are thinking of the regulators, for my idea and for my point of view, regulators should be coming from the inside of the sector. At least they need an advisor. They need a company inside who is advising them and telling them how should it be look. National banks shouldn't be just sitting and today or tomorrow I will be just launching a regulation which I decided or which I copied from somewhere. So for my idea, regulation is a good thing in order to protect people and their money, but bad thing on the should not push the company.
Yeah, we all remember this Luna crash, so yeah, they might regulate something. Max, yeah, for sure.
Yeah, just a bit to add, basically speaking about DeFi in general, right? So basically regulators inside of the countries, they want to regulate something which holds the customer money or offering the services which might be tricky, right? As the medicine, as the casinos, and so on. So now speaking about crypto, we are sort of a fintech. But if you are a non-custodial fintech, like most of the DeFi platforms, they sort of cannot regulate you because there is nothing to regulate because you don't hold client funds. The problem with the regulation of DeFi is coming from the different angle, and we didn't speak about this, but I think for most of you it should be pretty obvious. It's coming from the law enforcement, so from the police. When somebody stole a lot of money or somebody was killed or there was a virus which encrypts the computers and so on, and they ask for Bitcoin or Ethereum or whatever, and then these proceeds of this money are going through the mixers, right? Or the whole DeFi might be treated as sort of a mixer as well because it's not always easy to see what was the result of the transaction with the bridges, with the swaps and so on. So they go to regulators and say, hey guys, we have a problem. When somebody steals money, we cannot trace them. So they have problem with that. DeFi in general, regulators don't care that much. They care about the places where they cannot trace the money. Because before DeFi it was easy. If somebody stole the money, they move the money to exchange, they write to exchange, and exchange either freezes the money and informs who is the person behind, or at least informs that it was exchanged into something else and sent somewhere else. That is why Zcash and Monero you hardly see on the big exchanges because they already had this discussion with the law enforcement. And if you are a big business, you always have to work with them. Otherwise, your regulator will write you a message that you don't have a license anymore. And if you don't have a license anymore, you don't have the Visa, MasterCard, banks, and so on, and good luck to your business. So it's simple as that.
I totally agree with you, and I really want to add that I think it's also responsibility of the business actually to help the law enforcement with the knowledge and education to give them actually the tools, you know, to do their work, you know, to fight the bad guys.
Yeah, thanks. Levan, what do you think as the representative of the Bank of Georgia?
Like most of the things that I was thinking about, like our panel already said, I think I also agree that regulations are important because it's always important to protect customers. I think at the end of the day, regulation should be kind of framework and if, like, from the bank perspective, banks should have possibility to have their own intelligence and own technologies in order to understand, like, what is the actual safety environment or safety measures that they want to present, right? And I think since the banks also want to be in part of this game, they have the role to help the crypto companies and fintech companies to do the digital identity or like apply those success cases, whatever we had in financial transactions, to the crypto world too. So we also have today the digital onboarding process, which actually is fully online, right? And it has the technologies like liveness detection and also the scanning process. So, but that's something that is adapted to today's world. But I'm sure there are plenty of possibilities to create new solutions that help the customer protections. So it's, as Georgi said, right? It's all about like learning the industry first and understanding how it works, and then working on the rules that is directed to the customer protections, rather than just be very harsh. Because like most of the times, at least until today, was like yes or no type of approach and limits and declines. But I think the next level of that would be to be very smart about the regulations that is coming up. And I think in Georgia, as we all know, there are first steps coming for the end of this year. And there will be some regulations that will be introduced. And with those regulations, also the banks will be able to provide those crypto trading services to the customers. I think that's a good start, because at least we have possibility to operate on the market. But then I think it will be very important to be very careful in terms of the balance of the regulations. It should be directed to the customer protection first and foremost.
Yeah, agreed. Thanks. Yeah, I guess I'm fully satisfied with the regulations. I think we can be done with that. I propose you to move to the next topic and talk a bit about the adoption. Max, I think we should start with you here. So I see that the main roadblocks to mainstream like adoption, it's such things that accessibility, education, improving of UI, UX, and security, etc., etc. So can they be handled in the near future?
Yeah, so the main thing I would say is education, right? For people to understand what the heck is this blockchain, cryptocurrency, DeFi, Web3, and what all this means, right? Because many people are in this industry, let's be honest, to make money without digging deep, right? Just like, let's create something, raise some money, try something and fail and say, okay, we tried. Or to buy some weird cryptocurrencies without having the idea what are those and why are they there. So understanding the industry is the core. Then the utility, right? We need to be able to use our cryptocurrency for something, right? At least for investments. Of course, this is easy, right? And I think majority of the people who enter the space are driven by greed, not by the technology. So we need those people who are here for the technology, right, and for decentralization and for the private money. So educating people what crypto is and why it was created, right? If you ask many people why cryptocurrency was created, they will say like, we have no idea. And this is the core. Then the utility, right? It's the task of any crypto enthusiast to educate people around you, your friends and parents and so on. We are like the secta, right? We believe in Satoshi, the gospel of Satoshi, and so on. And we have to spread it, right? It sounds crazy, but this is how adoption works. All our businesses, right? When we create something, we educate other businesses with whom we want to do business, right, and solve their problems, and explaining them how we can do it with the help of crypto. And then those are the tools, right? So we develop the tools for the people to use crypto. We develop the tools for the businesses to use crypto, and then we have more people, more businesses who are using crypto. They will be trading with each other and creating added value for each other. And that is how this technology goes into the world. I mean, it sounds obvious, but each of us in this space are responsible for adoption.
Yeah, agreed. Iouri.
I wanted to add a bit here. Actually, when you're talking about adoption, I always remember this funny story. Like my mom, she works in a hospital and like very far away from this financial world. And when she got her first debit card, she actually thought that it's a CDBC cold wallet, so to say. She just thought that the money are in there, you know, somehow encrypted. So it's like talking about adoption, like how much actually people would need to know about like all the technology and how it works. For some people, it's not interesting, you know, but they can still use the benefits. It's kind of like you don't need to know how all this hashing is done, or you don't need to know like how to code and so on. There have to be like products which have the value which blockchain cryptocurrencies bring, but which are still like commodity that people don't have to go like so much into details to know just to use them. And then here you're coming back to the question of regulations, though, like those users have to be protected like one way or another.
Okay, thank you, George. I guess you have something to add.
I agree with Iouri on that. And if you, for example, ask the audience, how many of you have bank accounts? Probably everyone, right? Yeah. How many of you really know how banks work in the back end? Not a lot of people, I guess, so the hands would be much lower. The same goes with crypto. You don't need to understand fully. You can understand the basics, but you can still benefit from it. So when we meet a lot of people, oh, I don't use crypto because it's just too complicated. It's also that complicated to understand how the traditional banking works and traditional financial world works, but you still use it because you are used to it, so from early age. The same goes with crypto. As more applications are developed and as more user-friendly it becomes, the easier it is used to adopt. And I also agree on the not only crypto as a payment side, but blockchain itself as a application. Blockchain itself can be applied in a lot of real-world cases. And again, even though you might think intuitively that you need to understand first to use it, it's not really necessary. You can still be an early adopter. And all of us here, actually, who are interested, we are still considered as early adopters, I think, even though the market cap for the crypto is much higher than it was 12 years ago.
Yeah, it's kind of like to say, you know, when you're using your classical credit card, you don't need to know that like authorization message is like 100,
exactly.
110 message, you know, when you're going to the shop. It's useless for you to know. It's just like, you know that it's secure, you know that you can get like your money back if something goes wrong, and you know that your money is secured in a bank. That's it. And you can use the card. It will be the same here, I guess. It should be the same here.
I think I'll just add like 2 words. I think the usage comes from the basic needs, right? Like how the NFTs become popular, right? Sneakers, because people wanted to make more money and have those sneakers that their friends had. So they started to learn how the NFTs work. Also, like the overall, the banking or the credit card is just an instrument, and I think the technologies, NFTs, cryptos, those are the instruments. What you want is to transact, right, and shop online, let's say, and the processings and cards are just the instrument to do that. I think it's pretty much the same for technologies that we're talking about. I mean, I don't really think that customers should understand that deeply. The whole thing is once it becomes reality, like once the Web 3.0 becomes reality and there will be services that customers really want, then those technologies will become just an instrument for that.
But of course, like the people need to know like the basic security. Like here, I would agree with Max that like people should be aware. Like with the normal cards, you shouldn't write like a PIN code on your card.
Yeah,
things like
sure.
that. It's like that level, of course, has to be there when the commodity is on the market.
Yeah, gotcha. Thank you, guys. I think we have like several minutes for 2 more topics. How many minutes do you have, Olga? 5 minutes. All right, 5 minutes.
Was it 5 or nothing?
Nothing. Nothing. For questions. All right, then. Yeah, we can start with questions if you have.
Just when the people are raising hands and as Olga is doing the catwalk, basically we are giving the new headphones from Apple, the new ones, as a present for the best question. And also we are hiring like crazy. We have a charter, so if anyone wants to join the crypto business, please come. And also we have a social activity on the stand. We are giving out the iPhone Pro, the last one. What is this, 16? 14? Yeah, so please join on the stand after the panel or after the conference. Please, Olga, I'm sorry.
Hello. Giga Gigolashvili, Head of Marketing Department at HR Space. Thank you very much for what you just said. Very informative. My question is a little bit complicated in that sense because it takes ethical part, philosophical part at the same time. Because Iouri mentioned about the transparency thing, also regulations, which comes to the question, okay, so we have the thing that we have to pay the tax afterwards. We have been doing some sort of transactions going on. It's regulated, very good. But then again comes the question about the anonymity. Okay, we have a product, the company is selling something. How is that thing regulated? How much is that regulated and how much will the government be putting the fingers into finding what's the product inside? And then comes the question about layering. If we are transparent in the product and I'm selling something, our company is HR oriented, for instance, and then like not us, but someone else start to do some shady things, and then someone from the government comes and wants to see what we're doing, how much are we giving out for that, our freedom, and then how much it influences the original idea of being decentralized, and how much will it be regulated, and where are we going with that in the end? Like how much are we giving of our own freedom, how much are we giving away the original idea of it, and what we in the end do we benefit from that so much? Thank you.
So I guess that question was to me, right? Do you give prizes for best answers as well? Cool. So when it comes, for example, to taxes, right? Like personally, I think it's a good thing to pay tax, because it benefits the societies, it helps to distribute the wealth. I'm also pretty much in favor of white economy. I think that the gray economy brings the society and the countries into the bad shape because it helps all these shady businesses to grow and so on. So I think the economy should be white, transparent, and this is what then makes the whole society better, and this is how the democracy actually works. About like the original idea that the whole thing to be decentralized, like it doesn't contradict each other, you're staying decentralized not in order not to pay taxes to do something bad, you can use it, but that is not the whole point of idea, you still can be decentralized, but you still can pay your taxes, you still can be like compliant with the laws and regulations when you're selling something, if you're selling something bad, I think there should be like the ways for law enforcement to find you, and it's kind of like not a good thing, So it's kind of like philosophical and complicated question, but it's also, that the answers are on the surface when we look what is good for our society.
I vote for question. That's a very good question.
I'll just add one thing. We see that a very exciting shift is happening. Crypto companies are becoming much more like banks, and banks are becoming much more like crypto companies. So there is some kind of in between where they're going to meet each other, right? For example, Binance itself is now at the forefront of the regulations and getting licenses and stuff like that. But Binance, when it started, did not even have an office. it became the largest exchange without having a single office. And then the CEO said that we have to change that because it became just too big, you know. It's just like when we go back to 2008 and the whole idea behind creating a Bitcoin. Not the whole, but one of the main was there were banks which were too big to fail, so we had to get rid of them. Now the crypto companies are becoming too big to fail, and that's why they themselves sometimes require regulation. Binance is one of the primary examples. They have now a global board that is actually not dictating, but at least helping different, which is, I think, necessary, but at the same time, it sacrifices a lot of stuff that was the original idea of Satoshi Nakamoto.
That's I will add something just. Philosophical question. I liked it very much because original idea. Are we going out from the original idea? That's need to be discussed hours and hours. We are saying regulation is necessary to protect you and protect from shady businesses, from killing someone, kidnapping someone, selling someone. So, but at the same time, original idea was a different thing, right? We were saying decentralization. We were saying totally different thing. We were believing something, but reality comes, companies like us, we need to be regulated. And the reality is that.
Yeah, sure. Just let's move to the next question.
Just, again, Lavrenti Gubin, Plasma 8 agency. So actually, we're now talking about the following, that the general idea of cryptocurrency was decentralization, right? This is the unique offer of this product. Otherwise, it's something the same as we have with fiat money. But my question is, as soon as we see that from true decentralization with Bitcoin provided, we're coming to some kind of centralizations, right? In jurisdictions, within companies, within boards, like you said. So the question is true decentralization possible in this world? Especially when we talk about money. Because money, what is money? Money is a debt. So debt means that someone has to pay. So it means responsibility. So is true decentralized responsibility possible in this world? Or maybe we're looking for something impossible. I don't know whether you're ready to answer this question.
You should go to the conference with the Bitcoin maximalists. There is a good one in Riga, Honey Badger. You should go there and you will understand that the answer is yes, but it's very hard, it's complicated, the requirement for education is huge, everyone has to be an expert in this community of full decentralization, and people are lazy. So yes, but it will not happen most likely.
And you should listen to Charles Hoskinson a lot.
Yeah, we have time for the last question, unfortunately.
Thank you very much. I am Agnes, a crypto blogger, and I would like to ask a question. We all know that Bitcoin was created in 2008, 2009, and it was the biggest financial crisis at that time. And I would like to ask you how crypto, and especially Bitcoin and other, will help to cope with other financial crises.
Who is ready, guys?
That's, you know,
We
like,
have the bankers here, so guys, have fun.
Financial crisis.
Will it be crypto or still Basel III, which will help to avoid the crisis?
Well, thanks for the question. I think it's a very good question, and not sure if I will be able to answer it like predominantly. But I think it's not necessarily in the technology, right? I think it's like if in 2008 it was more about like assessing the risks and the right risks. So even in the crypto world, I think those risks needs to be evaluated, and companies need to use those technologies in order to understand like the financial institutions, how to credit those the companies or businesses, and I think it's not. I'm not sure that it's the actual breakthrough in the blockchain itself, like when it comes to the financial crisis. I think it's more about how the, like what market are we talking about, where the businesses are, what are the, how the evaluations of the companies are, done, and how the credit risk is assessed. I think those are the key questions that we need to ask when it comes to the probability of the next financial crisis, I would say.
My answer is yes, if there is enough adoption. When in 2008, the problem was that the banks, which I said, which were too big to fail, the government just decided to print more money to bail them out. What does printing money mean for everyone to understand? We have not created any valuable, but we have created money. So basically, the price of everything should increase, right? So we essentially indirectly, not us maybe in Georgia, but in the U.S. taxpayers have indirectly bailed their companies out. And these companies themselves made bad investment decisions, very high risk decisions. And for example, Lehman Brothers, which went bankrupt, it had only 3% in equity and 97% was financed by debt. So even a 3% decrease in the global market would mean that equity of that company, one of the fourth largest banks at that time in the US, would be zero, right? So the people have indirectly paid for someone's bad decisions. If Bitcoin was everywhere at that time, central banks just would not have a way to print more money. So they would the companies would fail. Yes, some people would lose still jobs, but people still lost their jobs, right? So the same thing happened, but we became poorer. With Bitcoin, we at least would not become poorer, but the people would still lose money. Yeah.
Okay, thank you so much, guys. Sorry, but it was the last question. We were out of time. So thank you so much for the great discussion. I hope it was interesting. You guys, you can listen all these speakers in the room across the hall, and you can just find them somewhere and ask your questions, and that's it. All right, thank you. Have a great time.
Thank you very much. Thank you. Thank you, Max.
Thank you.
Thank you very much.
Thank you, everyone. And the winner of the headphones is the guy from HR Space with the question of decentralization and the taxation on receiving crypto.
Congratulations.